Hi, this is David Clausen with the Idea Stock Exchange. This is your weekly analysis of the stock market for March 1st, 2010, and I have here a 10-year weekly chart of the the S&P 500. So let's examine in on this and let's see what's going on here. If you can tell from we're ending the month of February, and we're going to look at this candle right here, and we can tell that February started low, but then had a nice rebound. So the month is showing us that buyers are coming back in. We'll see how they do when they get up here. You can tell this is called a shadow up here on the candlestick. How they do into this selling, if they're able to, um, the buyers are stronger than these sellers that came in around here 1150, 1125 and stuff. Um, and I pointed this out last week, is that you can see here we have long range bars. In other words, the buying activity was strong from March of last year. And so it looks like, well, it's slowing down here, that any future movement in the stock market, if it does go up, don't expect it to go up as fast, or at least probability says it won't. So if we do see gains in the market, it probably won't be as fast as we expected or got last year in March around this time. Let's take a look at a weekly chart. And we can see here strong selling down here. If you follow a guy named Dan Gramza, he's really great. You can just Google him. He talks a lot about candle charts and how to read them and stuff. And he would call this a benchmark candle. And so this is kind of our guide. And we can see that we're coming up into this benchmark candle. And so there's going to be a lot of resistance up here. All these buyers around here in this area, in this benchmark candle, are going to be looking to be selling. So we'll see if the buying can outweigh the selling in this stuff. So this is a caution area. Doesn't mean it won't go up, but if it does, it probably go pretty slowly. Something to expect. The week that we had here, we can tell this is what they call a hammer. Selling came down, then buyers came right back in. Let's take a look at a daily chart, see how they look. And we can see here it was. Here's that hammer that came in, selling, but then buyers came right back in. So that's pretty bullish. That people think that, or that investors think that, the stock market's going to be looking good in the future. And we still are above this swing high. Or in other words, we had a close above that. So there is a subtle uptrend in the daily chart. But here like I said, those candles we saw in the weekly chart, we may run into a lot of resistance up here. So the buying may be a little bit slow around here. Let's zoom in on intraday. Intradays are great because that tells us where the institutions are going. And I can see right here that if you're going to be buying, you want to see some strong bars coming in over the this resistance area here. So here we have selling. These shadows they're called, and selling up here. So we want to see strong buying pop in up through here to know that the institutions and the smart money are involved in this rally and stuff. Here we had this gap, but it filled in. So, and what that means is any of the sellers who missed out right here, they may want to be sellers around here. And so the buying kind of came in. So it looks like that's fairly bullish. And I'm going to point something out to you that's pretty interesting with, if you're familiar with the Fibonacci's. And I had these Fibonacci's up here. And I put one from here to here. And we got resistance at the 61.8% retracement level. And look how it did around this area of 1110, how we got resistance, came down. And then I had a Fibonacci, I'm going to get rid of this one, from this low up to this high. And look how it adhered to the 38.2. Now it isn't always perfect. And you can see the 23.6 we had buying around here. But these are zones. These are areas where possible buying came in. could come in, and it did here, and it took it up to here. So when you're buying retracements, and like I said last week we were around here, I said there's a good likelihood that there'd be a pullback, and we got the pullback. And then what I did is I put the Fibonacci's in, and I could see where possible buying came in here at 23.6 and 38.2. So Fibonacci's are a great tool. They're fun to do. I'm just going to take a look at the NASDAQ real fast. We'll just pull up a daily. And I just wanted to take a look, because last week we looked at the relative strength, and we want to see how that's performing on the NASDAQ. Okay, so here we have a relative strength chart, and we can see we're still in a nice uptrend. It didn't move up too much this week, but generally it appears that the buying is heavily more into NASDAQ type stocks or tech stocks than maybe the bigger cap S&P type stocks. So strength is coming in. If you did want to buy, or you're anticipating a buy, you might want to look at some technology stocks. And let me just pull up a 60-day, just so we can see intraday what the NASDAQ looks like. And we can see here as well, we got this big gap down, filled in, and it looks kind of the same scenario. Look for buying to come in strong around here so that we can make a run up to these higher levels. If not, it looks like could make a run down to 2100 or just consolidate in there. So I hope this gives you a good visual clue of what to expect for the next week. Please comment on this. You know, anything you think I missed or you agree with, or anything else. I'll put a link on this page so you can put in your insight. Love to hear from you. Thanks for listening, and great luck with your investing. Take care. Bye-bye.